The UK inflation rate has dropped significantly in the past year, from a peak of 12.7% in January 2022 to 8.7% in December. This is the lowest annual inflation rate since June 2021, and below the Bank of England's target of 10%. But how does the UK compare with other major economies, such as the US, the Eurozone, and Japan, and what factors explain the different inflation trends? According to the latest data, the UK has experienced a faster decline in inflation than its peers due to its earlier peak and different policy responses. The US inflation rate was 4.9% in April 2023, down from a record high of 8% in 2022. The Eurozone inflation rate was 9.2% in December 2022, down from a record high of 10.6% in October 2021, 13 14. The Japan inflation rate was 3.5% in April 2023, up from 2.5% in 2022, 18 19. One of the main reasons for the UK's earlier peak in inflation was the impact of Brexit on trade and supply chains. The UK left the European Union's Single Market and Customs Union at the end of 2020, which caused disruptions and delays in imports and exports of goods and services. This led to higher costs for businesses and consumers, as well as shortages of some products, such as food and fuel. The UK also faced higher tariffs and non-tariff barriers on some goods traded with the EU, which increased prices. Another reason for the UK's faster decline in inflation was the aggressive monetary policy response by the Bank of England. The central bank raised its benchmark interest rate 4 times since November 2021, from 0.1% to 1%, to curb inflationary pressures and support the pound sterling. Higher interest rates make borrowing more expensive and saving more attractive, which reduces demand and inflation. They also strengthen the exchange rate, which lowers import costs and inflation. By contrast, the US, the Eurozone, and Japan have maintained more accommodative monetary policies amid weaker economic growth and lower inflation expectations. The US Federal Reserve raised its interest rate only once since December 2021, from 0.25% to 0.5%, and signaled a gradual pace of tightening. The European Central Bank raised its interest rate twice since September 2021, from -0.5% to -0.25%, but kept its massive bond buying program intact. The Bank of Japan kept its interest rate unchanged at -0.1%, and continued its yield curve control policy. The different policy responses reflect the different sources and dynamics of inflation in each economy. The US inflation was driven mainly by strong domestic demand and fiscal stimulus, which boosted consumer spending and wages. The Eurozone inflation was driven mainly by soaring energy prices and supply bottlenecks, which pushed up production costs and consumer prices. The Japan inflation was driven mainly by rising food prices and import costs, which reflected global commodity price trends and yen depreciation. In conclusion, the UK has experienced a faster decline in inflation than its peers due to its earlier peak and different policy responses. While this may ease some of the pressure on households and businesses, it also poses some challenges for the economic recovery and stability. The UK still faces uncertainty over its future trade relations with the EU and other countries, as well as potential shocks from the global pandemic and climate change.